Today we got FOMC, and from what I am reading into about it, it seems like another, hey, don't worry about it, kind of a lackluster kind of deal where they just say, it's okay, everything's fine, and we can keep the rates elevated higher for longer, and we don't have to adjust the rates right away. So that is very interesting, and not a lot was happening in here for the market. But we do notice that we have made another new all-time high. Except we might have made a reversal signal in here. And so in the beginning of this video, I wanted to state that in this video, we are going to look through a bunch of charts. We're going to be looking at the SPY and the Qs, which are giving very awesome 30-minute signals. And we're going to talk about a few other things going on with the market at this point. But at the beginning of this video, I thought it would be fun to look at something that was brought to my attention by our stream this morning, right? By the chat in the stream this morning while we were live. And I wanted to show you guys JP Morgan. I want you to see the problems that could start to come forward if this is some kind of blow off top kind of moment for JP Morgan, and this is kind of the bank's sentiment here. So we will notice in times where this is going to see dramatic downturn, we actually see this big run up first. Then we start to see that fluctuation then drop. We could be in that period where we start to see that fluctuation very soon before a big drop for JP Morgan. And I wanted to point out all the signals from top to bottom on this. I know this is supposed to be the intro, but I just think it would be fun to look at it together. So for this video, we want to look in the beginning here at JP Morgan showing divergence on the RSI. Now notice that is not on the MACD at the same time. So that does tell us, and as we violated this divergence point and all the divergence points back here, right, during this overall, almost a weekly squeeze type thing, what is the big problem here? Well, that is the fact that the MACD is up high. Okay, now when it is up high like this, that means you need to be leaning towards pullbacks. Pullbacks are what we're overall leaning towards. Now on the weekly, that can look very drastic, but on the weekly, you would be still open to this curling back up into positive territory at some point, right? If we curl down to something like 230, 250, and then we curl back up into positive territory in the next few weeks with earnings or something like that, it can still be okay for JP Morgan. But I wanted to go down the tape here and just show why JP Morgan would be a very, very, very risky investment at this level. And that's the daily chart as well, right? The daily chart, you're not necessarily seeing the best divergences on the MACD or RSI, but you have a very small one in the near price action. And so when you have a very small one, which I don't even really want to conclude that that is divergence, but this is where you want to start to go, okay, I'm seeing this round out. This is potentially going to cross down and cross through that 9 and see some kind of daily pullback. Well, one, where could that get to? 250 isn't a very obvious level. That would be a great pullback. Do I have signals that are telling me that this has to be some kind of massive collapse right now? Not necessarily. You really don't. You just have a MACD that is extremely positive. And so if that ever wanted to turn up anywhere in this at any time, pullbacks would be the most likely scenario for JP Morgan on the daily scale. But if I wanted to find a potential trade setup to take maybe a short position with this, these signals going on here, the daily looking like it really needs a pullback, well, then it better show me some weakness in momentum. And a good hint is the fact that you have this tiny little divergence on your RSI down here. So the 2 hour is showing those divergences perfectly. This is just fantastic that you're able to hold the first point, you're able to hold the second point really, and then you're able to hold the third, and now you're making the fourth. And this is huge because now you have triple divergence on your MACD and almost quadruple divergence on your RSI right now. So what I'm looking for from JP Morgan, right, is for this to cross down, give me that confirmation bar, just give me that go signal to potentially take a trade here, see a 2 hour bar that does close, full 2 hour bar closing below the 9. If that wants to close below the 5, that is fine. I'm willing to take it as it crosses through the 9 and take longer outdated option expiration, okay? Because if I take this for a month, or let's say I take it for Friday and I say, oh, this is bad, this has to be bad by Friday. This could easily see something bad and then just turn right back up for one more push higher, right? We've seen multiple times where we get this last little push, right, to really get us by that center line to go into negative territory with all of the divergences. So I want to be aware of that, and a way to really mitigate my risk with that is by taking a longer outdated option. Okay, that means that I could say, hey, I'm expecting this to see a daily pullback in the next 2 weeks, but just in case there's a few more hiccups, I'm going to take a month out so that I can manage my risk accordingly, right? So these are some great signals. Now, what would we be paying attention to in here? Does this 2 hour here have a good chance to cross? Looking at that 30-minute, you're going, wow, doesn't that look like divergence once more? Now, these are very flat divergences, so that is very interesting to me, and I still think you could potentially be squeezing, but you are getting that rejection confirmation right now. So this is, hey, the trade is on. If something goes wrong, be willing to manage that trade. But now we've fully broken down JP Morgan and showed how there is extreme weakness across this. And you're probably going, why the hell are we doing so much research into JP Morgan? Well, because a lot of the time in crashes, it's banks that have huge issues. So if you're having a bank like JP Morgan show you all of these reversal signals, you might want to pay attention to it. And the reason that I'm talking about this first and why I'm showing off that this could need a major pullback at this point on the daily scale is because of how things are looking with the SPY right now, is because of our daily expected moves for tomorrow. So thank you for that long intro. I hope you enjoyed a little lesson on JP Morgan for a second. But we got to talk about this market because JP Morgan might be flashing red, but the market set something for us to react to as well. So let's get finally into it. Now, we did go through that pretty quickly, so you might want to, put that on half speed and go through it again, or ask questions in the morning, right? We go live every single morning. I would love if you gave a subscription to the channel, because then you can join us in the morning, and I'm more than happy to talk stocks with you. I really am trying to pay attention to the chat throughout my mornings, and I'm going to continue to do that because people really do enjoy it. And then maybe you can ask questions about stuff. Maybe you can chat with someone in the chat, and you guys can become friends. That seems to be happening a little bit. But let's talk about the SPY, because the SPY curled up and it never curled back down, right? We were looking for the obvious break here, and looking back, it's always going to seem obvious. But what we want to do is be confident. Be confident when we take the trade and be willing to manage risk if that starts to go wrong, right? So that was the bar right there that just said, hey, swing trade me to the upside. I'm right by the center line. You've tried to break me down multiple times, and I'm consolidating by the resistance, so that pops up. Okay, awesome. But what's going on for tomorrow? Well, we have daily expected moves, and look at these daily expected moves, guys. If this isn't making you go tomorrow's fishy, then we need to do some more talking about how you're looking at stocks, because this is 614.84 to the upside and 611.02 to the downside. Do you know how much implied volatility that is for tomorrow? 6%, roughly. It's actually less than 6%. So if we have less than 6% implied volatility tomorrow, it means we're going to get the most nothing burger of a nothing day that you've ever nothinged. But those days come with a lot of risk. There's a lot of risk on those days of seeing something crazy. And something that I'm noticing here from the signals are this 2 hour is starting to get to overbought territory. Looks like it might be a little bit out of gas. And we have 30-minute signals for you. So we actually have a 30-minute signal for you now. Were you paying attention? Because we posted a Patreon, and the overall summarization of that was just to be like, hey, just remember we're trading like water and to follow the signals, trust the signals. But in this time, you're aware of some bad things that could be there. We're aware of some mixed signals, some stocks showing up higher, some stocks showing down lower. So you want to be aware if those lower stocks are going to collapse, and you want to be aware if those stocks holding the market up are going to follow it. Right? If that takes place, you're going to see some selling come in. And so watch out for reversal signals. Even though the 30-minute is crossed up, right? We said the 30-minute crosses up, it's very likely to see upside. That was what we said in the video. But don't be sleeping on anything that pops out to you as a potential reversal signal. And you notice that the SPY, at the end of the day, if you didn't notice it by midday, you notice it now, okay? You notice it now. If this 30-minute does cross down, this is a 30-minute weakness. This is a weakness in momentum to the upside, saying that we could have downside momentum coming very, very soon, aka tomorrow, okay? So we want to be paying attention to this, and the bad part about that is this signal is popping up while you have an extremely small range. So if you have a reversal signal and sellers start to pile on, how likely is it for that to maybe pile on a little bit more and you go more than 0.31% down? I would say it's pretty likely, right? I would say that it would be pretty likely. Now, if this is just going to be something lackluster, it could quickly touch that. We could remain in this area for a bit and then see that reaction up. But as of right now, this is a reversal signal. We're seeing the reversal signal from the daily still holding at this point. If it's going to cross, we need to be aware of it. And this is a signal that could start that little tip over. So we're watching it. But overall, we want to treat this like what? Do we want to treat this like an absolute collapse, or do we want to treat it initially as just a 2-hour pullback? And I think right now you do want to treat it mostly as a 2-hour pullback, even though I'm sure people are connecting the dots a little bit here, pulling up 4-hour charts and showing divergences. I'm trying to get into a lot of info today if you can't tell. So if you have to watch the video twice, I'm sorry, I'm going fast, but there's just a lot to get to. The 4-hour divergence is there as well. So how are we going to know that this is more than a 2-hour pullback? Well, we're probably going to see that 4-hour cross, and we're going to end up down at lower levels. We're going to get a little bounce on Friday, and then people really buy into that, and then you better watch out because we might be heading lower. So, but for the time being, if the 2-hour can turn down and then turn right back up, that would be the bullish way to head higher. If the 4-hour curls down, that would be bad. And then going into tomorrow, you know that there is a 30-minute divergence above you that you need to be watching out for in the morning. I'm trying to go as extensively into the SPY and the Qs as possible because we have mixed signals out there. So it is almost a disservice for me to try to form an argument for, hey, the whole market can go in this direction with the signals that we have now. We have Meta that's starting to collapse, right? We were looking for that. We have things like Nvidia that have seen a great rebound, but it's just overall, like, is that a lower high? We have Netflix that's starting to fall. We have big stocks that are starting to come down just a little bit, okay? But we also have those reversal signals from things like Microsoft, from things like Amazon, from things like Google. So it is better for me to look at this individually and give you the best information I can based on the Qs chart alone. And then we'll go look at some other things. As of right now, what do you see on the Qs? Because I see the confirmation of divergence towards the end of the day. Confirmation of divergence, and now we're seeing what? The 2-hour might need to crumble here, and the 2-hour does hold the divergence point technically. I bet it's on the 4-hour chart if you want to see it. Ooh, just getting rid of it. So very nice. But this means that a 2-hour pullback is very likely. This is a great run. I mean, if this is going to hold up better, you would love for that to happen, right? We would love for this to see some kind of retrace, end up down towards 533, even all the way down towards 528, and then we see that thing bounce back up. So as of right now, the 2-hour, even though you have that 30-minute signal, the most likely thing is the 2-hour is going to curl down and then be able to curl back up because we are so close to getting to those monthly expected moves. Now, if we do make that move and we get a 2-hour divergence up here, man, we are going to talk about it. But keep in mind that yes, a pullback is the most likely scenario, I think, with that signal if it proves. But we need to be paying attention to the fact that, oh my gosh, 542.59 to the upside, 536.45. This is the third lowest implied volatility for a daily expected move that I've ever seen. We are looking at 10.9% as of right now for the Qs going into tomorrow. So we need to be paying attention to it because that means two things. And it's kind of crazy that that means two things, but it technically means we should have a full 68% chance that the Qs are going to do jack all. They're going to do nothing, right? But we've noticed that when they're extremely small like this, it's been a lot of the time. I don't have a percentage point for you. I'd have to go look back at my trades and things like that, or go look at history of these daily expected moves. But for the time being, when these are really tight, it means that no one is expecting a lot from the market tomorrow. So if we get a piece of good or bad news, right? If we get a piece of good news, that can shoot you up. If you get a piece of bad news, there can be an overreaction tomorrow. And that's what I wanted to mention here for the Qs. The time where you will be a little bit more worried is if daily charts start to confirm down. So then we look at volatility and we said, hey, 1504, always looking for the reaction of 1504, 1504, 1504, 1504, 1504. Oh my goodness. So what we're watching here are for a couple of things. Are we going to fill this gap? And I think it's very interesting to leave that gap behind. And I think we are highly likely to fill that gap at some point, but we might see a reaction first and then see that come up. But for the time being, let's just read into the signals and not try to speculate. If the 2 hour does cross down, it is very likely you're filling that gap. It's likely you're going to test this low, go make a new one with the reading of volatility here with the VIX. But if that sets up a divergence point and turns back up, what does that tell us as we already have divergence here? Now we would have triple divergence, one of the strongest reversal signals that you do have, especially in conclusion with volatility. If the SPY is showing something similar at the same time, holy crap, that's bad. Now, why is that bad? Well, because those type of setups are known to curl up daily charts. And if this daily chart curls up, you have that opportunity at elevated levels to see a spike in volatility. Just to give you a little hint of little spikes in volatility that we got around that 1504 in the past, just in the past year or so. All right, that was a little 22% move, but what happened when we made a divergence? 58% up. Okay, this was a pretty good little move, but what happens when we go down to 1504? Oh, we get a big spike in volatility, 51% again. So now you're just seeing you don't necessarily want these dailies to curl up if you want the market to remain bullish. And right now you are seeing the 2 hour hold up at higher levels. We're holding the 1504. Even as we hit new all-time highs, people are not saying, oh, this is great, this is great. People aren't hallucinating yet. But you'll just notice that if this would curl down and that bullishness continued, this would be a great trap signal to be paying attention to. For tomorrow, if we're going to get volatility to come in right away, well, that makes sense. If this 30 minutes going to curl up, it makes total sense. We're consolidating a little bit higher up. Yeah, it's a pretty wild consolidation because it's volatility, right? But we do notice, hey, okay, we're going to break down to 1504. That was stated here. Then we scoop up, we curl down. Okay, we're going to go down to 1504, and then we get there. The key thing is, does this curl up one more time? Do we actually see this level broken? Do we see the trend broken? And does volatility come back tomorrow on a day, right? Volatility comes back maybe on a day where the market is expecting squat. The market is expecting almost nothing, according to the options data for tomorrow. Very, very interesting stuff. I would just make note of these things. And the thing that we like to say on Patreon a lot of the time during our update videos are, this is just a reason. We say it all the time, but I think this week is very important to be managing risk, managing your trades, having a plan. Having a plan of how I am going to manage my risk, how I am going to manage my play, how I am going to take profit. Having a plan going into tomorrow, probably a very, very good idea. Now we do have the 10-year yield still trying to carve out that higher low, actually. Now, this was worrisome, and we still should be aware if this continues to drop or starts to drop very rapidly, because that could mean that people are starting to really think recession and something is starting to break, and so we got to get these rates down, okay? So that's just something to be aware of. But right now, what does the chart look like? Well, originally was breaking down, started to catch a little bit of ground there, and we'll notice that in this area, we did get a little bit excited, and what did we do? We went down to make that right shoulder that could have been, right? Left, head, right shoulder. So if this is able to break above these previous levels of, I would say, probably about 4.629, just the top of this bar here, if we can do that, we'll be curling up the daily MACD and yields might be screaming to the upside. So be very, very cautious with that, especially if you're a TLT trader. If you're looking for this to break down, well, then you're liking what's happening right now with the 2 hour crossing down, and you're hoping it makes a new low here. Because at the moment, you have a low, you have the high, you have a higher low, and you want this to start breaking down at this moment. If you want these yields to go down now, you kind of want this 2 hour to be able to just scream downward and not be able to flip back up at some point and cross up this daily chart. That's one thing I wanted to point out here, though. And one thing we need to keep in mind too with that, looking at the 10-year yield, is some data. Okay, so the initial jobless claims, people will be reading into these numbers and the continuing jobless claims. Don't think that just because it's not a red thing on the side that it's not important. People will be reading into initial jobless claims, and worst case, it's just going to give Wall Street a reason to tell the news, to tell you why stocks are selling off or pumping, right? So it will be utilized and we need to be paying attention to it. We want to see if jobless claims are increasing rather rapidly, because that means that cash might be a big thing. If everyone's going unemployed, cash might be pretty important. We do notice from this daily chart that the dollar was trying to roll back around from our point of 106.49. Still could end up going a little bit lower, right? If we look at this 4 hour, it looks like what? It looks like it's perfectly going up. It looks very, very flaggy. We could see one more drop down and make that 4 hour divergence. And this is a signal that I would highly encourage people to understand and look at, because if you're aware of this and then you see this and the market continues to go higher during this time, and then eventually you see that daily cross up, it's very, very likely that you are approaching some kind of top. So just be aware of these Dixie signals right now, because if you make a 4 hour divergence and that crosses up, that's going to be bad. If you make the daily just cross up without making those divergences, throughout history, hasn't been the best signal as you're at super elevated levels, so I'd be paying attention to it. We do notice a few other things that are kind of warning signs, and I know this is kind of a sporadic video, but I just need to, like, I've had these thoughts all day and I just need to get them out because I think I came up with some very important things, and I feel like you guys will get it and you'll be like, okay, these are good things to be aware of. HGX, the housing sector, notice that as of today, that gapped down. That gapped down after that news. So the housing sector is not giving you any love here, which is very interesting because it looks like it's like a day or two away from crossing up. So just be aware if that housing sector does want to cross up there, could potentially be a higher low. But I just wanted to show you how today it is not saying that an upward move is the right one. In fact, it's saying that downward has been the move for a long time. The housing market is in serious trouble here, in my opinion, and I want to be aware of that. All right, now I'm going to look over at one thing, Dow Jones, and then we're going to keep moving on. Dow Jones, this is fantastic, and this adds more credibility to we are going to see higher prices first, right? Just because there is a small range doesn't mean it has to be bad, doesn't mean it has to be some major thing, right? We could just be seeing consolidation to head higher, okay? So this is where it's very important to be reacting, because the SPY looks like it might be overzealous, but the Dow Jones might catch a bid here, okay? You might catch a bid. You do have daily divergence that's confirmed, but it's really held up well in this continuation triangle. So we're just seeing if this 2 hour can turn up, and you notice at the end of the day, it was able to turn up for the Dow, and that's something we really want to be watching, because that looks like it's about to break through some potential resistances above you, and if that's able to break through, hey, you might be heading to a weekly expected move with this one. So let's just watch out for any traps up in these areas for the Dow Jones. But we're touching on a lot of things. I know we're bouncing around a lot, but I just want to point these things out to you guys, because me going through the potential signals that are in these individual stocks right now could convince you that Microsoft and Google, right? Let's talk about it this way. Microsoft and Google could convince you that we're about to see a crazy upward move. And we already talked about that in the Patreon video. So this actually played out. That's fantastic. I'm glad we put out the Patreon video. It's showing positivity, but it looks like it's getting to a spot where it might need to pull back, and you're always at risk of that 2 hour crossing down. Then you have Google that says, hey, yeah, this is going to the upside. Google is one of the best signals. We showed it off during the Patreon video. We showed it off during the live show. I think it looks fantastic. But I'm a little nervous for it. Why? Because we have other stocks like Nvidia going up into serious resistances. We have other stocks like Meta that is finally vomited. We have other stocks, big stocks like Netflix, that is finally showing some weakness up in here, even though it's still holding the trend, right? So this can continue to be positive until it's not. So the overall statement that I'm trying to get at for this video, and maybe I'll just leave you guys off with this, is I still, at this point, and I know it's crazy, I know I've been like this for, shoot, it seems like almost a week and a half or 2 weeks now, I still see these bullish signals. I see them cross up, I take a little play, and then I get too nervous to hold them to target. I'm just going to be genuinely honest. I feel like I'm seeing too many red flags out there, and now I have another one with these daily expected moves to convince me like, oh yeah, I can just confidently hold everything and everything's going to go up. I do not see that at this point, so I'm mitigating risk as much as possible. I'm just not trying to take those those huge plays still at this point. And I've discussed why for the last couple of months I've been like that, right? I've been like that for a little while because I think we are just teetering up. And one of these times where we see that next upward move, I think it's going to get ugly. And so I just want to mitigate my risk by saying, hey, if I'm going to take a bullish trade, I'm probably going to take profit a little bit faster and have a plan for how to get out if we get some bad news tomorrow with that 30-minute divergence that has popped up for the SPY and very low implied volatility. So I know it was a different kind of video. We did pop into a bunch of stuff. I know people probably want me to go over AMC, GME, all these other things. And I would encourage you to come to the live show tomorrow and bring up those stocks, okay? Come to the live show tomorrow. I'll look at some other stocks for you. We'll look at those individual stocks. And that's how I think you have to treat it right now is whatever trade I'm looking at, look at it very individualistic. Don't try to read into the SPY and the Qs as much. I just want to look at my trade, see if it has the 5 reasons, take the trade, and then have my plan for if something goes wrong. If I'm going to get tricked, if I'm going to get trapped, if the signal goes wrong, if it fails, I need to be paying attention to those things right now and just focusing on that single stock and that single price action. I think that's a big thing. So thank you guys so much for watching. I know it was a different kind of video. We will be live tomorrow morning to watch some stocks with you in the morning. So if you have questions, if you want me to look at Microsoft, Google, gold, anything that you guys want to look at, bring it to the live show in the morning and we will check it out for you, okay? I hope you have a great evening. I hope you have all the luck in the world tomorrow with your trades. And I just genuinely want to just say thank you for being a part of this community and making me have a good time talking about stocks. I do really appreciate it, and I look forward to seeing you in the morning. All right, guys, peace out.